Now, on to the analysis for tomorrow. And let's get started first with the E-mini. Isn't it fun when the markets are actually moving and throwing off some volatility and you can make some good money? I mean, we start off every day with the idea of shaking that money tree that the CME puts out there for people that know what they're doing, and we've become pretty good at it if you take the recommended trades. Okay, this is our F1 screen. And you can see we have a higher low and a higher high. That favors buying weakness to see if we can extend the range. And I would point this area out. This is the attractor in the 37, 38 area that stopped the market this morning. Next area up here would be in the 41.5. So we got enough volume here in the 38 to 41.5 market to really slow it down. So failure to get through 42 would set up a short. But if the market will close in this 34, 35 area, it's pointed higher. And we'd like to be buyers to see if we could take out 42. And if we can't take out 42, then we can trade from the short side. So this one says higher prices tomorrow, the F1 screen. Taking a look at the F2 screen. Very broad, very wide profile. I'm going to shrink this down. And we're going to go to 4-tick increments from 2-tick increments so we can maintain some perspective. And we'll pop that up right now. But back in the fall of 2013, it was a one-way market, and we quite often day session ranges for the high and low of the day would be 8 handles, 8 points, and there wasn't much to do, and you couldn't really get short. Those trades just never developed. So you kind of got complacent. You just buy, and if you didn't like what happened to you that day, the next day you'd be a pretty happy camper. So right now we have a two-sided market. It has definitely increased the volatility, and we're getting back into those days where we can look for 15, 20 points of movement during the day session, and that makes for easier trading. Get right down to it. This is the high volume area that we were talking about. So we've got this 41.75, and we've got our 36.37 right here. So this is the attractor. This is the area that the market is being pulled to. It's value that's been built up over the last 180 days. Above that, we've got a dent in the volume at 46.47, and then naturally 50 right here is going to be resistance. So we've got resistance, say 40, on the assumption that we can take out today's highs, then 45, and then 50. And the last rotate down stopped at 29, so we'll have support at 30. Then we have this K low at 23.25, so this would be our second support band. And then our third support band, the J period low, is in this 15 to 17 area. And it's also the bottom of value. So the easiest trade to see and call would be sell failure to take out 35. 37. If we get through that area, the next area that the trade would be selling 39 to 41 to take advantage of that high volume area. And I think the market is pointed to this high volume area. And then if we take that out, go through that 44, 46. On the buy side, we're at 35 right now, so that 30.31 is going to be buy 1 on the assumption we can trade higher. And then the 25 area will be buy 2. Okay, we have news tomorrow that could impact the trading, and that news is housing starts and permits. And they're looking for 950 on starts, 1.1 on permits. We got industrial production, and that was called up 0.5%, and that could beat that number on industrial production 0.5% because of automobile sales last month. They had really a very, very big month. I think 16.3 on an annualized basis. Capacity utilization, nobody pays a lot of attention to that at 78.8. In inflationary times, when the Fed's fighting inflation, they will pay attention to it. When it gets north of 82, then it could become a factor. And then crude inventories, the yearly calling for plus 2.4. So the focus will be starts and then industrial production. And the industrial production number could quite easily come in greater than 0.5%. So that's it for the E-mini. We'll move on to the note. Okay, the really did hit the ball out of the park this morning on the note. We wanted to buy the 9 to 13 area. The low was 11.5, and we said that if the E-mini sold, that could develop into quite a big trade, and the E-mini did sell in C period, and it did develop into a great big trade. They started off a little slow, no doubt. But as the selling picked up in the E-mini, the buying picked up in the financials. So on this screen, we've got a lower high and a lower low, so we can be sellers on this time frame, which is the daily time frame. Every day we do the analysis the same way. We look at the market, we review what has happened, we review the upcoming news. The sequence and the order is the same. That way we've got structure, that way we've got context, and then we look for confirming market activity to take the trades. It's a very comprehensive, very tight way of looking at the market. Pretty simple to learn too. Okay, so this is the buy. We'd moved up to 9 to 13. It did kick in, and the market did trade up, hitting 28. The E-mini has strengthened. The note and the bond both have come off their highs. So right now, the trade that we see here is the sell failure to take out 24.28, and then 31 to 03. On the buy side, we're going to make it 13 to 17. If the E-mini does not take out that 37 to 40 area, and then buy 2, we'll put down in the 5 to 9 area. If the E-mini rallies, this market's going to come off, but it won't break because of the uncertainty in the financial systems around the world and what may transpire and go on in the Ukraine. So that's what we see for the note. If the E-mini sells, we're going to have to pay up. If the E-mini rallies, we're going to be able to buy on the cheap. Okay, looking quickly at the bond. Now, once you learn how to put on trades in the financials, in the note, which has the lowest tuition costs of any contract to learn how to trade, then you can take that knowledge and those skills over to the bond, which is twice as volatile, and it trades at 31.25 a tick. And you'll really like that. 31.25 a tick makes a huge difference, and it tends to give you staying power. The traders will stay with their trades longer because of that 31.25 a tick. And it's very, very reliable when it retests support and resistance. And you can see that right here on this chart. It retested resistance to the tick and it held. When you take out, support. When you take out resistance, market traded right through. So it's a great contract to trade. Okay, last rotate up here is 35.01 and an end period was 30, so we're going to sell failure to take out 35.04. And then we're going to sell 7s to 11s. On the buy side, we have these single prints, so 21s to 17s will be buy 1. And again, given what's going on in the Ukraine, I don't think we can break the financials. That could escalate and get out of trouble, get out of hand in a hurry. And, if you think about it, if you're Russia, do you really want to do what it takes to take over the Ukraine, or have you really gotten most of what you want by taking the Crimea away? Think about Russia having to occupy the Ukraine, and you've got generational memory of what it was like to live under the former Soviet Union. These people don't like it, and you wouldn't either. So Russia, to my way of thinking, probably has all that they want, especially given the fact that the United States and the EU is going to pay for Ukrainian natural gas. No, Nancy, selling failure to take out 135, 135.04 is sell 1. We're currently at 134.27. Sell 2 is 7 to 11. On the buy side, we're buying 17 to 21 and 9 to 13. So hopefully I drew what I wanted. So, me either. Sell failure, SLF, 35 to 04. Sell 2, 7 to 11. Does anybody know how to use a pin pad on computers? I've got one more step that I haven't been able to do. If you do, put your name up and I will contact you to speed the process. Okay, gold is interesting. If the stock market rallies back, if there is peace in the Ukraine and Russia, a couple of the reasons for buying gold will have come off the table momentarily. Now, I think gold has a long-term bias to the upside or certainly sideways because people do not like what is going on politically or financially around the globe. So we rejected prices basically below 90. Then we weren't able to crack 98 to 99 down here. So we've got our first buyer is starts just below 1300, and we're at 1304 right now. Conversely, the spill, the 7.5, 10 area was an area that was resistance before. So our first sell is going to come in this 5 to 7. It's very, very aggressive. It's in the face of a P. A lot of it will depend on what happens with the E-mini overnight. Second sell will come in the 10 to 13 area. Buy 1 is going to be at 1300. And then buy 2, where we thought we wanted to buy it this morning, will be 95.97. So E-mini rallies, peace in the Ukraine. Gold can come off a little bit. Shooting starts in the Ukraine. E-mini fails to rally. Can be sellers. Can be buyers. Okay, gold came off today in spite of the instability in the Ukraine. Crude held against support in spite of the instability in the Ukraine, and the articles out that the Ukraine was going to take back government buildings in 9 different cities in the eastern Ukraine. So we didn't have a lot of range. We had a buyer against 103 and we had a seller against 104 in crude, and that's kind of where we are. Tomorrow, for the EIA inventory, last week it built 4 million barrels. We're looking for it to build 2.5 million barrels tomorrow. And we'll adjust that in the morning. So 2.5 million barrels is where the market is. We got a seller at 104. 104 and a quarter will be S1. Second sell will be 475. If the tensions escalate in Ukraine, you do not want to be short. On the buy side, we're at 53, so we'll make 103, 103 and a quarter buy 1. And then buy 2 will be 50 to 75. Let me copy those down. Okay, last to the euro. The euro's interesting. Sometimes it can sell off of problems in Ukraine. Sometimes it will rally. And there's a couple of factors going. One is the impact of natural gas from Russia and via the Ukraine, the potential impact of that on the economy. And then the other is the spreaders, again, yen to euro and dollar to euro, and they seem to flip every other day. So we can have tensions in the Ukraine, and the euro can actually rally, but normally you'd expect it to sell. So it's not a super clear picture right there. The European Central Bank would like to see the euro lower so they can export more goodies. And every time they say it should be lower, it manages to rally back. So that's where we find ourselves. So right now we got a seller 25 to 35. Then we had last rotate up was this 50 area right in here. So then 50. So this will be sell 1. Sell 2 will be 50 plus or minus. On the buy side, we've done pretty well buying 37.90 to 38. That's a difficult trade for me to make because I think it should be lower. 75.65 would be more comfortable. So that's all I have right now for our markets. It'll take about at least 10 minutes to get everything up and posted. Let's stop the recording.